0% growth in the third quarter. Is it mostly because of the energy constraints that we're seeing right now?
Right. If you look at, the downgrade in Q3 GDP, actually a chunk of that was related to the virus outbreak that we saw in July and August. And the August activity data showed the damage from the virus-related controls. In addition to that, most recently, we're seeing power outages and electricity shortages, and that translates into production cuts. It's pretty severe, but it's only the last 10 days of September. So in terms of overall impact on Q3 GDP, that translates to about 1 percentage points sequential annualized growth rate.
I think we've seen close to 10 days of liquidity injections from the PBOC. Is this a telling sign to you that they're trying to limit the risk as much as possible when it comes to the cooling of the economy? And does that mean we're going to get a triple R cut pretty soon?
Right. When you look at the seasonal pattern, every year around this time, ahead of the long holiday, PBOC typically inject more liquidity, both in terms of a 14-day OMO and also just managing market liquidity overall. So we are expecting triple R, but we think the recent injection, most of that is likely seasonal.
We talked about the supply shocks that we're seeing, whether it's a crackdown when it comes to energy, tech, and the like, property. These are all self-inflicted sorts of crackdowns here. But do you think that there is a bit of tolerance here in terms of just how willing China is to sacrifice growth for some of these structural reforms?
Yeah, it's a bit surprising to us as well how much regulatory and just policy tightening that has been happening over the past few months. I think that tells you that indeed growth is not the #1 priority for the policymakers this year. We did sort of a scenario analysis. If you assume growth is 0% Q3, 0% in Q4, pretty severe, you still get above 7% full year GDP growth. And remind that the audience that the target for the whole year is above 6%. So that tells you that the growth target is really not binding. So that's why we think policymakers are taking this opportunity to do the things that they want to do, which impact the economy negatively.
How are you interpreting the silence from China when it comes to Evergrande right now? And maybe in terms of a longer-term picture, does this bring to question here a change in the growth model for China, that it's just steering away in a very aggressive way away from the build model?
Right. I think fundamentally or structurally there is a shift, and that shift didn't happen yesterday. That happened a few years ago when this policy maker talk about housing is for living in, not for speculation. They really want to change the role of a housing market, both in terms of cyclical policy, because previously, in previous cycles, when the economy is under pressure, they will stimulate the sector. That's not going to happen again. In terms of Evergrande, that more short term, I think that the market needs some clear communication from policymakers. But we're seeing signs of policymakers. They're not sitting aside and not doing anything. If you look at yesterday Q3 monetary policy meeting statement, they mentioned housing. That's probably a response to Evergrande.
And Yigan talked a little bit more about keeping monetary policy normal and also warning that other central banks about continuing on when it comes to QE. What can you tell about that kind of hawkish? It seems very hawkish, this kind of signal. What do you think that tells you?
Right. It is a hawkish, but it's also not new. If you look at whether it's Guo Shuqing or Yigang statements previously, they have always been saying that to lose the monetary policy, fuel asset bubbles and have negative consequences. So they are of the view that monetary policy should leave room because you don't know what's going to happen next. You want to have room to cut when it's needed. So I don't think that part is necessarily new, but it does sound pretty hawkish.